Hello, everyone. It's nice seeing everyone joining the webinar. Hello, Pavlos. It's nice seeing everyone joining the course today. Excellent. Okay. Good evening and welcome. It's a great pleasure to have you with us today for our fourth topic in our current series of webinars, where we'll be looking at the various aspects of well-being. Webinars will include physical well-being, nutrition, relationships with our adolescents, the work-home balance, and more. My name is Joanna, and I'm working at EIMF. For those who are perhaps joining us for the first time, please let me tell you quickly what we do. So EIMF stands for European Institute of Management and Finance. It's a leading European training provider offering training and professional qualifications across an array of different learning areas in all sectors. Although we do have a strong presence and specialized expertise within the financial and corporate services sectors, our learning areas include personal development, management, technical skills, financial regulation, banking, legal and accounting, being some of our key areas of expertise. Our learning initiatives are offered via live online e-learning, and hopefully soon we will return to our classrooms. So we're looking forward to hearing some insights from our expert today on our topic, personal budgeting. Before I introduce our presenter for today, I would like to mention that we will do our very best to answer some of your questions through a short Q&A session at the end of the presentation. So please feel free to write your questions at any time during the presentation using the Q&A section at the bottom of your screen so that we can revert to them later. It's our pleasure to introduce today's presenter, our very own EIMF trainer and tutor, Marios Mortis. I say tutor because Marios also teaches our accounting qualifications. So, a little bit about Marios. Marios holds a bachelor's degree in business administration and accounting, a master's in banking and finance, and he's a qualified ACCA accountant. Marios has a vast working experience in accounting, audit, advisory, assurance, and banking sectors in various positions and companies in Cyprus. Marios develops and conducts professional training courses on numerous topics that assist working professionals. Some examples would be corporate reporting, accounting and finance, and financial workshops specific to the needs of numerous industry sectors. And he also participates in research within the area of finance and accounting on both academic and professional levels. Here at EIMF, Marios holds the position of trainer and accountancy programs leader, where he delivers many courses, including topics such as the cash and treasury management, credit management, IFRS application, ethics, risks, management accounting, and indirect tax. So I think that Marios will be able to offer us some insights today. Okay, I will hand you over to Marios. Let's hear what he has to share with us. Marios?
Thanks, Joanna. Thanks for the introduction. Hello, guys, from my side as well. I hope you're doing well this day. We are here today to talk about an interesting topic, the personal budgeting. I prepared something for you today, guys, that hopefully will help you. Improve your financial position. I'll share my presentation. Joanna cannot.
I don't see anything at the moment.
We have an issue here.
Just try again now.
Okay. Great. So, as Joanna said, I'm Marius Mortis, and I'm here today to talk about personal budgeting, an important process that all we need to implement and follow throughout our lifetime in order to maintain a certain level of financial feasibility, our personal financials. We know that financials forms a significant part of our life and can affect our lifestyle as well. So today we will go through a simple process. It's a more common sense process of how to prepare a plan and control our spending and control our income in order to make sure that at the end of this process we'll be able to achieve our financial objectives and our life objectives as well, because financials will contribute to the achievement of our personal objectives. Let's see what we'll try today. What we'll try to achieve today. Today we'll learn how to identify and develop your financial goals, which is the first step of the process of the budgeting process. We need to know our destination before start drawing our map of how to reach this destination. Then we will learn how to examine how financial values comes into play to this process, discuss basic budgeting terminology and principles, talk about challenges and barriers to budgeting, which has more to do with the availability of information and knowledge, and then discuss ways for you to track your financial health and progress. Our today presentation is divided into three parts. At the first section, we will introduce the idea of budgeting and how we can adjust this process that is most commonly used and implemented by organization, but how we can implement the same process for our personal finances. And then the second section, we will walk through the steps that we need to follow to an efficient personal budgeting development. What are the process that we need to follow? What are the steps that we need to take in order to make sure that we prepare a personal budget, efficient personal budget? And during the third section, we say a few tips about how to live your budget and not just planning it. Now, let's see what is the idea of budgeting. We know that there are many times, especially when the end of each month reaches, we use to say, to perform an internal dialogue with ourselves and wonder where does all my money goes in the month. I receive my paycheck and I consume the majority of my money, and I don't know where I consume this money. When will I be able to pay off my loans? I need to know. I needed to take out a loan to acquire a home, to acquire a car. So when I am gonna repay this loan? How I'm going to be able to afford to purchase whatever we like? To purchase a new home, to purchase an apartment, or to acquire a new home, or to go for a holiday to a country I like. We always say to ourselves, thinking about money makes me nervous because of uncertainty, because we don't know what we will be able to do in the future. And when it comes to prepare a budget or to think about financials, I'm not we say as an excuse, I'm not a math person. I can't figure out how to manage my finances. I don't have the required financial literature. I'm afraid to know how much I spend on the various things. I went out last night with my friends, how much I pay. I'm afraid to see my bill, my credit card statement, how much I spend. My spending is out of control, and this is a fact for all of us. We used to spend money without thinking about how much we spent or how much we left with to complete the month until the next paycheck. There are some triggered warnings. Money management can sweep up stuff within us, anger because we want to do certain things that we cannot afford, guilt because I spend money that will contribute to the repayment of a loan, or I couldn't purchase something for my child. Frustration, sense of hopelessness. All these feelings are stirred up when we are thinking about money management. Anxiety, fear, what I can do in the future, what I will be able to do in the future, and avoidance. All these feelings comes into play when we are gonna think about our financial and how to manage our money and our financials in order to make sure that we will be able to perform our obligations, to pay off our debts, to pay our bills, and have some money available to do what we want to do, not what we need to do and what we must pay at the end of the day. To make things clearer, it's important to see some money facts. Have you ever wondered how many times a day do you spend money? After research, according to a new research, the average person spends money 3 times a day on average. You probably spend 5 times or 2 times, whatever. It doesn't matter how many times you spend money, but at the end of the day, where you spend those money and why and at which amount. It's important to understand that money brings happiness because we can do whatever we want and not whatever we need to do. Money problems, though, on the other side, brings unhappiness to people. So a good control of our financial will maintain a certain level of happiness to our life. Not an absolute happiness, but a certain level of happiness. Money problems stay with us for the rest of our life. If we face money problems, if we have a huge debt to cover, if we cannot control our spending, or if we have limited income resources, then we face money problems, and the majority of times these problems are following us throughout our lifetime. And the top reasons for divorce is financials. Finances affects everything else in our life. The research indicates that the #1 reason for divorces nowadays is financial problems. Have you ever wondered small expenses that we used to pay without even think about them, how much money will cost us? A movie with a popcorn and soft drink can easily cost about 20 euros. Just one soft drink a day for about €1 adds up to 361 euros a year. And what about food? The teenagers, if we have children, our food is a huge expense to cover each month of our life. So these are some facts that will make us understand, help us understand the important finances in our life. Now, the good news is that there are ways to improve our finances, make more money. This is the easy way. But what about in difficult times that, like the one that we are going through nowadays? with all this COVID situation? Are we gonna be able to make more money? Cut your expenses is another good way. But there are some expenses that we need to make. There are some expenses that we want to make. And there are some expenses that we can live without them. So we start by cutting our expenses. A very useless system to follow is the way to win the lottery. I tried this system in the past, it's a total failure, so do not try it. A good way to improve your finances is to have a budget, a well-developed, honest, and organized budget. And I avoid the word honest, because for a budget to be effective, we need to be honest about our spending habits, and what we need to do about these, and what we are willing to sacrifice in order to meet our budget, prepare an efficient budget. What is a budget now? A budget is a plan for the coordination of resources and expenditures. We have limited resources and we have unlimited expenditures too. Okay, so we need, as far as we have limited resources, income, and a lot of expenditures, we have to prepare a plan of how to allocate these resources in order to cover effectively these expenditures. But what is actually a budget? A budget, if we put it simply, a budget is a plan for managing your money in a way that best meets your personal needs and wants. It's like your life roadmap. You set your goals, what I want to achieve in 10 years from now, what I want to have in 10 years from now. I want to be debt-free. I want to acquire my own house and not rent an apartment. So this is my goals. Once I set my goals, I'm ready to draw the map, which is depicted on a simple budget of how to achieve these financial goals. So the budget is a plan for managing money. While budget, the reasons are many. Will allow you to know where your hard-earned money goes. There are so many times we wonder where we spend our salary, how I consume the whole salary before the end of the month. It's a first step in making future financial plans, because in order to prepare, as we said, the budget, we need to have some financial plans, some financial objectives. By getting into the process to prepare a budget, we are forcing ourselves to draw and develop some financial plans. Helps you limit unnecessary spending so that you can afford things you need. In order to meet your budget requirements, you need to limit your spending, or at least to control your spending, so it will help you do things that in the past you could not afford. Helps limit financial anxiety, because you know exactly where and for what reason you are going to spend your money, and you know that at the end of the month you are probably left with some money as savings. The budget does not require any significant math knowledge, only requires simple plus and minus or multiplication, but mostly just plus and minuses. What my income is, plus. What my expenditures are, minus. What the payments require are, minus. These are simple months. Gives you permission to only spend up to a certain amount and helps you promote good habits. You will feel comfortably in the first time that you will get into the process to prepare a budget. But if you do this process constantly, will be a habit afterwards for you, a good habit. And through the control of your spending, you will create some good habits for yourself as well. And you will find yourself in a position that you will be able to pay for things you want to pay and not you need to pay. Now, how we can start to prepare a budget? We need to start from scratch. Whether you have a budget that is giving you challenges or have never created one, let's wipe this slate clean, take a clean sheet and start writing your objective and what you want to achieve through a budget. Have a healthy dose of skepticism to this process. Skepticism about the information available on your finances. Choose sources of information wisely. We have a huge pool of information out there we can use in order to get ideas of how to develop a budget. We have available information about our spending as well. If we pay our expenses by our credit card, then we have a statement which details all our spendings. But first thing first, empower yourself to become an expert on personal finance. There are a lot of books out there you can read and get ideas of how you can improve your personal finances. But then first thing first, stop hiding your head in the sand. Be honest with yourself. What I'm spending, which of all those spendings are unnecessary for me? What are the incomes I have? What are the incomes that I could add to my existing income? And start preparing your plan, your financial plan, which is using no words but numbers, your budget. Now, let's see the process of how to prepare an efficient personal budget. What are the steps we need to follow to prepare a budget? The process is to create a budget that works and allows you to live comfortable and happy life, because you will have the economic ability to do things that you want to do and things that you would like to do. You need to get a firm handle on what you are currently spending. What are my spending habits now without any budget? What you can afford to spend, which of all those spendings I have each month I can afford to pay, and what your priorities are. The process starts with prioritizing all your spending, which requires a certain level of honesty to yourself in order to prioritize your spending. Depends on your individual needs. Now, the first thing to do is to check your financial position. What is my financial position? To be able to answer this question, you need to create a net worth. Start by listing everything that you own, all your assets, money in the bank account, that are sitting in a bank account, house, car. What is your ownership? What are your assets? List all those assets at their current market value. There is no requirement of expert opinion, just approximation here. I have a house. How much this house is valued? Add up all your assets, sum up all the values of all your assets, and then subtract cumulative liabilities. What are my liabilities, my obligations? Do I have any debt obligations? Any overdraft accounts, credit cards or debit cards accounts? Any other obligation to third parties? So I need to prepare a simple personal balance sheet. All my assets, all my obligations. And the net result of this simple equation probably give you a positive number. This is a good thing for you. If you have a positive net worth, it's a good thing for you, because you can build on this. You can start from something and build a wealth for yourself to increase this wealth, your personal net worth wealth. Now, if the result of this equation is negative, there is no reason for desperation here. This is a starting point to begin working toward a positive net worth. It's not the end of the world if you have a negative net worth. You can do something about that if you work correctly, if you work efficiently. So the first thing to do is to identify where you are standing today, financially wise. Then, after knowing your financial position, your abilities today, you're ready to set your financial goals. The previous exercise that you need to do will help you define the correct financial goals for you. You need to identify and write down all your goals. You can classify them between short-term and long-term or medium-term goals, objectives, where you want to be in 1 year from now, and where you want to be in 5 years from now, where you want to be in 10 years from now. But be careful, this process is important because your short-term objectives should be a step closer to the achievement of your long-term objectives. Be realistic to this process is important, not to set unrealistic financial goals. Make them achievable, practical, and owned by everyone. Keep them in a forefront. And you can journal the process, the whole process. And if you, each time you complete, each time you achieve a specific predetermined goal, give a reward to yourself, celebrate it. And write them into your monthly budget as well, in order to remind yourself that this is my objectives. This is what I want to achieve. And as the process move, then you can make adjustments. It's not a mistake to make adjustments on your objectives. You're not changing your objectives, but you're making them more realistic. So setting financial goals, what I want to achieve in 1 year. I want that by the end of this year to have a savings of 10,000 euros. Okay, so everything that I am going to do within the year will need to make sure that I will end up in the end of the year having 10,000 euros sitting in my depository account. But achievable and realistic goals is important. Gather the next thing to the process, after defining your financial position, your abilities, your financial abilities nowadays, after setting your realistic goals, the next thing to do is to start implementing the process of budgeting. You need to gather your financial paper. Before you begin, gather all your financial statements. Bank statements, investment accounts, if you have any, recent utility bills, pay slips, tax returns, credit card bills, or receipts from the last 3 months, if you keep the receipts of various payments, mortgage or auto loan statements. Gather all this information, which will help you identify very important elements of the budget: your income and expenditures. It's important to know where to look for information. Then calculate your income. Make a list of each income stream that you receive on a regular basis each month. So what are my fixed income, my stable income each month, my regular income each month? Okay, I need to base all my calculations on this regular income. The key is to only include that with the income you get every month. Once-off items like once-off income can be included, but you cannot base your budget on this once-off or irregular income. Include both monthly wages earned from your job or jobs, as well as monthly supplemental income if you have any. If you work for a company, for example, and you happen to have an apartment that is hidden by your grandmother or grandfather, and you rent it out and you have a supplemental income by renting out this apartment, then you can add this as well. It's a regular income. mark down the date these are received. It's important, the date when I'm receiving the salary, my wage. At the end of the month, at the beginning of the month, I'm getting paid every week or twice a month. I need to put down the dates and calculate the monthly income total in order to know each month how much money I have available to do what I need to do, to pay my bills, to pay my expenses, and provide for savings. Again, two things to keep from this. You add up all your regular incomes and the dates that you are expecting to receive these regular incomes. If you have variable income, like for example, from a seasonal or freelance job, which is not regular, consider using the income from your lowest earning month in the past year as your baseline income when you set up your budget. You need to include those incomes as well. You must never avoid to include this income, but you need to consider them into your budget for your lowest earning months. The next step to the process is to create a list of monthly expenses. Write down a list of all the expenses you expect to have during a month. For example, if you have a loan installments, or you rent your apartment, you need to pay rent, your car payments for maintaining your car, servicing your car, or your fuel expenses, any groceries. This is your more significant, probably your most significant expenditure. Payments for utilities and entertainment. It's reasonable to have some entertainment expenses, but you need to be honest of how much you spend on entertainment. For personal care, eating out or childcare, if you have a child, if you have children, transportation costs and travel. Use your bank statements, your receipts, and credit card statements from the last 3 months to identify all your spendings. And these statements and all this information will give you an indication about the timing of your spending, when you need to pay your loan installments, when you need to pay your insurances, or how many times in the month you visit the supermarket for your groceries. And the amount, on average, how much I spend on groceries, how much I spend on utilities. And this is an important exercise to do, to identify the trends on your spending. Some of those trends may not be aware to you before doing this exercise. You can see some of those expenses, which the list is not exhaustive, by the way, maybe necessary expenses in order to live, and some are expenses that you want to make, like for example, personal care, entertainment, going out, eating out, etc. So it's good to make a classification between the necessities and the not so much necessary expenses. Then, after brainstorming and listing all your expenses, you need to make a classification to those expenses, further classification to those expenses between fixed and variable expenses. Fixed expenses are those mandatory expenses that you pay the same amount for each time. Like for example, the rent. The rent is the same amount each month. So you know in advance that at the end of the month or at the beginning of the next month, I need to pay this amount of money for rent. Your loan installment is fixed amount of payment. Your insurance premium, etc., are fixed amounts. So you know in advance exactly how much you are going to pay for those expenses, and you need the majority of those expenses, you need exactly when you are need to pay for those expenses. And we have the variable expenses as well, which are the type that will change from month to month. Like for example, groceries, it is hard to spend exactly the same amount, except if you budget for it. the same amount for groceries, or gasoline, or entertainment, or gifts. These are variable expenses which are varied between the months. It's important to know the behavior of your expenses because will determine later on your budget. It's important as well to budget for actual and unexpected expenses. The first step is to create and maintain an emergency fund. And this is a key for the budget, to have an emergency fund, which are money you have on site in case an emergency comes up. Initially, this emergency fund should be about 500 or 1,000 euros, depending on your income level or your debt obligation. But at the end of the day, you need to make sure that you have on site an emergency fund equals to 3 to 6 months worth of income. It's important. It's important to have this fund on site, this money available in the case that you lose your job or in the case that you cannot work for a period of time for any reason, in order to have money available to pay your expenses during these difficult times. But by developing this, by creating this emergency fund, you need to develop the attitude that this is only used for emergencies and not because I didn't control my spending this month and the amount of money before the end of the month and how I can cover my needs until the next paycheck. It's only for emergency. So you put them there and you forget about them until an emergency, a real emergency comes up. Should you have to use this money in this fund for an emergency, the priority for the next month is to reapply the fund as well. If you use part of the money, of those money, then you will need to make sure that in the next month, you will be able to replace those money. It's important in order to maintain a certain level of emergency fund. This practice will save you when difficult times will come up. And be careful, we don't mean savings, but an emergency fund. Savings is something different. Now, after providing for the emergency fund, then you can total your monthly income and expenses. If your income is higher than your expenses, you are off to a good start because you have some money available for savings. This extra money means you can put funds toward areas of your budget as well. Or you can use those money to repay part of your loan obligations, reducing your finance expense as well. Okay. If your expenses now are more than your income, which probably happen, means you are overspending and need to make some changes to your budget. You need to make changes to your current lifestyle in order at least to balance the two, to balance how much you get each month and how much you spend each month at the first stage. And then working through the budget to make sure that you will reduce further your expenditures and end up with a positive budget. Again, it's an important. If you have more income now than expenses, you probably consider adopting the 50-30-20 budgeting philosophy. Well, this is a great budgetary system. This system means that 50% of your income will be spent on needs or essential expenses, like, for example, food, housing, etc., clothing, etc. The 30% of your monthly income will be spent on wants, which should make up to 30% of your income, which are money spent on things you want to do. You want to go out for a lunch with your friend. And the rest, 20%, will be used for savings and or debt repayment. This is a good system and good process to follow. Now, some practical budgeting tips. The budget must balance, as we said. At least must balance. They must equal always. The worst case scenario should be the income equals the expenses. If you make, you must have a destination for that money. That does not mean that you must spend it if you have some money available. Planning to put money in some types of savings account is a great idea, because you start achieving your financial goals to end up with some money on side, and they must equal expenses, and this is a rule. Plan carefully. Estimates should be based on some data, cover all expenses, and be practical. Do not over-calculate things. What I need to do, what I need to pay each month, what are my fixed expenses, make a list. What are my variable expenses? Again, make a list. They are regular expenses. Classify them between the needs and wants, between fixed and variable, and then work on them. Be flexible and write your budget down. It's not an exercise that you are thinking about it. Write them down. Once you write it, it becomes an actual plan. And be able to access your budget data easily. There are numerous of applications that you can use while preparing your budget. So do that, please. Now, leaving your budget, not just planning, I will give you some tips, guys, of how to live your budget in order to be part of your life, to embed this process to your life, and not just prepare a boring plan. First thing to do, start with your budget mindset. The first tip is living your budget, is understanding what it means to you and what you hope to gain from it. Why you get into this process? What do you want to achieve? You want a better life. You want a life with a reduced stress about the future. You want to be able to do things. Have a clear understanding what this process means to you. You can define this. Whether you view your budget is in a positive or a negative light can influence your relationship with it. So approach it like something that you want to do. And as the process goes on, you will find yourself that in a better position than before. If you struggle to and with sticking to your budget, ask yourself these questions. Each time that you find yourself struggling in sticking to the budget, how does budget make me feel? What do I dislike about budgeting? And what fears do I associate with this process? Have I subconsciously overlooked the benefits of budgeting or not? How can living on a budget help me achieve my financial goals? We need to understand why you need to do this process and how you can follow and embed this process to your lifetime, your lifestyle. How many times we are doing things in our daily life? This should be one of those things. Examine your money habits. Regardless of how much time you spend making a budget each month, it won't work if it conflicts with your actual spending or financial habits. So, and this is why we said at the very beginning of this session, be honest with yourself. If you haven't taken a close look at how you spend lately, you could be self-sabotaging your budgeting efforts without even realizing it. So check your habits, your spending habits before starting this process. And be honest, which of those spending habits are bad and good for myself? Which of those of the existing habits will help me achieve my objectives. Things that can work against you include, like for example, making small but frequent impulse purchases. So these small expenses of 2, 3, or 5 euros can distract our budget. Shopping your feelings, or the so-called shopping therapy. This is a good thing that will this is a bad thing that will disrupt your budget. Paying bills late and pay penalties for this late payment, or overlooking recurring charges on your bank account or credit card statement, and failing to plan for expenses that occur quarterly. And this is important. Once-off expenses or expenses that we pay twice or just once a month and year will disrupt our budget. So we need to provide them for those expenses to our budget. Exchange all old money habits for new ones. Once you identify the financial habits that keeps you from staying on budget, you can work on adopting new ones. This process, this honest process with yourself, will help you identify bad habits and remove those bad habits and replace them with good for you habits. And it's important. Choose the right budget method. There is a numerous ways to prepare your budget. The zero-based budget, which means that you start from scratch each time you are going to prepare your monthly budget or your quarterly budget or your annual budget, which is not suggested because you are missing important information from previous budget. Cash envelope method. This is a method that you are getting all your income and split this income, this cash, into various envelopes, and it depends on their destination. The one envelope will pay the utility bills, the other envelope will pay the rent expense, the other envelope will pay the mortgage, or whatever. The 50-20-30 method, as we discussed earlier, 50% the needs, 30% wants, and 20% saving and loan repayment. Budgeting by paycheck. So each time I receive my paycheck, I should budget how to spend this paycheck, and weekly allowance budgeting is another method that you can use. You can also use tools that make living your budget easier. As you work toward breaking your lifestyle and budget in harmony, consider what personal finance tools you can use to smooth the path. For example, you may want to use a budget tagger to track your spending and income automatically. This saves you the trouble of crunching the numbers. So how much it is not help you avoid to just at the end of the month take all the receipt you pay for the whole month and start adding up numbers. If you have one of all those budgeting apps, you can track your expenses, your incomes automatically. It saves you time and effort to this process. And at the end of the day, it will help you like the process as well. Fine-tune your budget regularly. Your budget, just like your life, can change and evolve. There may be new expenses to account for if you get married, start a family, buy a home, or achieve any other major milestones. Things are changing and you need to change your budget as well. The budget is not just a plan, a thing that you are prepared at the beginning of the period, of the month, or the year, and let it there. It's a tool that you need to use throughout the budgeting period. Adjust it for new information, for new things that comes into life. You get married, you have increased expenses, you start a family, a new child comes in. So the expenses will be increased, will be changed. So you need to have the budget as a tool all day throughout the budgeting period and use it. So, guys, some key takeovers and key ideas that I want from you to take from this presentation. If you have cash flow issues because you are paid only once a month, divide that payment by weeks and split your income and expenditure by weeks. Keep the cash you plan to spend in remaining weeks in separate accounts. So you can, it's like the envelope idea we discussed earlier. Pay with a credit card only if you will have the money to pay it off at the end of the day, because you're under risk to be charged with extra charges by bank. Adjust your budget monthly if you find you are overestimated or underestimated your expense. The budget is a life thing. You need to have it with you all day, adjust it to capture all the changes in your life. If you tend to overspend in certain categories, use budgeting hacks such as switching to a cash-only budget. So I pay only with cash, nothing more. Once your expenses are lower than your income, budget towards saving goals before you increase your spending. And take time to learn other financial skills. There are a lot of books out there you can use to enhance your financial literature and improve your financial position. So these are all guys for me, and I think we are ready for questions.
Excellent, excellent, extremely useful techniques and tips. Thank you, Marius. Okay, yeah, we'll have a few minutes so we can see the questions that we have here. Oh, we have one question on the chat. I will start with that. Okay, it says, hi, Marius. Thank you for the presentation. I would like to ask you how you could advise us to invest the money, and if we have money in the bank, how to use them to make more assets in our life.
Investing in your savings is a good thing because you can create one of the reasons that many people are facing financial difficulties is one reason only, the majority of times, is that they have one or only one source of income. And if you lose this source of income, you lose your financial stability and you start facing problems. What we need to care of is to create some multiple sources of income. In order, if we lose one, to be able to have some other sources of income until we find another job. For example, if we lose our job. By investing our savings, we can create some other additional sources of income. We are not expecting to have some the same income as from our main job, from the sources of income, but we can have some more money comes in each month, will help us acquire assets, finance our needs, our wants, do some things that we didn't afford to do in the past. But we need to be careful to invest those money into secure investments which has low risks and can be converted into cash. Because in the case that we are in need of those money invested in various investments, invested in various investment opportunities, we need to access to be able to convert them into cash immediately.
Can you give us just an example just to understand what is
the most secure investment of all, if we have some additional excess money each month, is to use a depository account and there's some interest from this depository account.
Right.
Or if we have enough money, we can invest in governmental bonds and get some loan payments each period.
Excellent. Right. Good one.
Always depends, if I can add this, always depends on the amount of money available to determine the investments. But what we need to consider is the liquidity of those investments, how easy it is for us to convert them into cash, and the risk. We need to invest in risk-free options.
Of course. Okay, I'll check the Q&A section. Okay, a couple questions here. can we do something else in combination with developing a personal budget to improve our finances?
Yes, of course. We mentioned it earlier. We can create some additional sources of income for ourselves to do something in our free time in order to create additional income streams in order to improve our finances. We can, if we can do that, we reduce even more our expenses. But the most important way to do that is to create some additional sources of income.
Okay.
If we have something that we love to do, we need to make this entertainment, this habit we have, with this activity we have to make money for us. Like for example, if I like writing, I can write a short book. Okay. Yeah. I can write on my PC and sell it through the eBay or sell it through the Amazon, and is a small but it's an additional income. Or we can do something to get some more income, but without sacrificing our free time and our family time.
Okay, thank you for that. Let's go to the next question. There are times that even with a budget prepared, we do have variances on what we're budgeted to spend and what we actually spend. Why?
The reason is the once-off expenses that we not provide to our budget. Okay. Like for example, how many times you find yourself in a situation that you run out of money, and the reason is that because this month I had a significant expense that I could not predict or provide for. This once-off things that appears within the months will distract our budget. So what we need to do, and this is one of the main pitfalls on preparing a budget, a trap that we always fall in, to not providing for one-off items, one-off expenses. So while preparing the budget, we need to have this in mind and provide for an amount for these unexpected items, unexpected expenses. This is the main reason. And the second reason, the payment for these small expenses we used to pay in cash of 1 or 2 or 3 euros, which if we sum them up at the end of the month will make a significant part of our budget. Will adapt to a significant expense for our budget.
Okay, great. Oh, have another one. It's a short one. How will I stay on track?
We use the budget to leave the budget, not just prepare the budget as an idea, a brainstorming of ideas at the beginning of the month. Okay, I'm expecting to have this income for the upcoming month. I'm expecting to have these expenses this month. Okay, I will sum them up, subtract the one with another from another. Okay, this is my budget, I will do that. Okay, I will visit it at the end of the month to check how I did. No, this is a mistake. We need to prepare the budget and have it with us in our wallet to revisit the budget and make adjustments and make sure that what we spent today was as per the budget provisions. Okay, there are numerous of budgeting apps we can use, software we can use in order to make our life easier.
Excellent. I think we're right on time. I would like to thank Marios Mortis for this beautiful presentation and sharing with us this extremely useful techniques and tips. Thank you, Marius, for today. I would like everyone to tell you that we will offer more free webinars related to the well-being series. The next one it's on Wednesday, 30th of June, and has the topic is putting life into living, maintaining mental health at home and at work. I think it's a great and interesting topic. So I hope to see you all there. Thank you everyone for joining us today, and I hope we'll see you soon.
Thank you guys from my side as well.
Thank you.
Thank you.
Bye everyone.
Bye.